98.87% of crypto investors might miss this upcoming Solana pump, and I want to explain exactly why in today's video. Go over the pros for Solana, go over the cons for Solana, and also look at the technical analysis to tell us what the charts are saying. Is this the time to accumulate Solana, or is it simply just a fake pump which could result in lower lows? We're going to talk about that today and my belief and my concerns with the Solana ecosystem, and actually go through my full thesis here, because I know a lot of you probably own Solana, and some of you that don't own Solana probably need to pay attention to what is happening, because there has been some major developments. So that is the main story that I want to cover today. But before we get into all the Solana news and what is happening with the Solana price, firstly, I want to talk about the macro for a second and talk about Bitcoin and some of the big news that we got overnight. Of course, Ryan hasn't been streaming regularly, so I think it's my duty to catch you up on some of the big developments in the market. Now, the biggest development that we had overnight was Fidelity officially filing for a spot Bitcoin ETF. Fidelity obviously joins the company of ARK Invest, Valkyrie, WisdomTree, and of course, BlackRock in filing for spot ETF approvals. Now, I did a video a few days ago where I said, look, the ETF approvals, we're now seeing a timeline where we could see approval lining up with the pre-halving, because we have the halving in 300 days. The latest deadline for the SEC to approve BlackRock's ETF or reject it is in 240 days' time. But the other factor that you have to take into account here is actually ARK, because they amended their spot Bitcoin ETF in line with BlackRock's policies, because they want to kind of use BlackRock as a framework, because if the SEC approves BlackRock and they have a similar framework, then the chances of them getting approved also increases. So what we actually saw was ARK do an amendment, and the SEC has to make a decision on whether they approve or deny ARK's request, or delay it, that's their third option, by the 12th of August. So on the 12th of August, I think we will get some market movement in the lead up to that. And on that date, if the SEC does choose to delay it, which I've got a feeling they will, because we all know the SEC, they kind of like to take things slow, then they have a 90-day extension period, which they can push back 3 times to actually land us in February 2024. So there could be a situation where we don't see an ETF approval until the beginning of 2024. However, I think if we're looking at the most logical timeline, Q3 to Q4 is probably when we're going to get a decision on this, unless, we get a shock decision on August 13th, which is probably, the lower probability there. But Fidelity also joining the race. I think everyone wants a slice of the pie now. And I think the SEC could be prone to allowing this one, simply due to the fact that they've received a lot of backlash over their approach towards crypto. And I feel like, with us heading into an election next year, they almost need to chuck crypto a bone so they don't seem overtly anti-technology, especially for the Democrats. That's, could be a strong Republican argument in the next election. So I think the Democrats really do need some sort of win for crypto, just from an optics perspective. And an easy way to give crypto a win is allowing an ETF for crypto that the SEC already considers to be a commodity, which is, of course, Bitcoin. So that is something to keep your eye on. More filings keep pouring in. Fidelity, obviously, a multi-trillion dollar asset manager. BlackRock managing over $10 trillion in capital. So big players now starting to enter the market. It's been a huge regulatory shift over the past few weeks. And look, that is the primary reason for why we had this swing off the lows around the time of the USDT FUD at 24.8, all the way up, this huge sustained rally to 30K. And we are now forming a higher time frame bear flag on the 4-hour and the daily bull flag on the 4-hour and the daily chart as well. So you can see we do have lower highs, but we also have higher lows. So what this means is that volatility is condensing within a range. So the swings are getting smaller and smaller and smaller. And typically what contraction in the market leads to is expansion. Now, where we get the expansion, that is the next major thing we have to work out. If you start consolidating above 30.5 on the daily chart, then obviously that is a good sign that we could make this final push up into this macro resistance at 32K. So that is what you would want to see, that breakout of the bull flag on the 4-hourly that can result in those targets towards resistance, and then obviously reassess, because a lot of people are going to be shorting that area. And then the other scenario is you actually get a breakdown. So you get a push up into this zone, a rejection, then a retest of the 30.4K level. So that could look something like this. And then a breakdown, which can take us all the way down to 29K. So I think 29 to 29.4 could be a really important area if we do get down there to reassess how Bitcoin is responding in that zone. If you start responding positively in that zone, so you see a confirmed reversal on the 1 hourly, this could actually be a nice level to scoop up some Bitcoin, maybe some like higher beta alt plays. We'll talk about some at the end of the show, but for example, the ones that have really been performing relative strength-wise, Solana is actually one of them right now, but also, Stacks, these kind of coins, BCH, Litecoin, etc. They could also be plays, but Bitcoin, with the dominance, increasing further and further and further over the last few weeks, is probably still going to be your best play in the scenario of trying to buy a dip. It should also respond pretty much the strongest. We can see dominance now reaching new highs for the year at 52% after it broke out of that range. So yeah, that could be a decent zone if Bitcoin breaks down to reassess. And if we get a nice reversal, scoop some up lower, we may not actually get there, but there's also the scenario we break out to the upside, and in that case, then you probably want to be long Bitcoin. Now, in terms of what I'm doing, obviously, I'm spot long Bitcoin. I'm always spot long Bitcoin. I'm always spot long ETH. I'm always spot long alts. But how aggressive I go spot long does change on market conditions. I think my Bitcoin and ETH bags are actually quite big. My alt bags are relatively small by my standards compared to Bitcoin and ETH. Because I'm still waiting for some bigger corrections on some alts. In saying that, I have been stacking a few over the last few weeks when we have corrections. Sol being included, I actually did buy some Solana. As you can see here, took a nibble at my Sol/Matic bags. I did a tweet during the whole, Robinhood's pre-sell-off around the USDT FUD time, and since the time of this tweet, we are up roughly 22%. So some decent spot ads that I made in that zone. Also, accumulating Bitcoin ETH, some other alts as well, but still relatively heavy Bitcoin ETH spot. And in terms of my leverage long positions, I am still long Bitcoin. I did shave some of my long positions off the table, but I am still net long Bitcoin because I'm still seeing higher lows starting to be printed. So until we start breaking down and I look to cut some of those positions, obviously I've got stops in place around the 30K level. I am happy to keep riding the long here. And actually, if we start to reverse and hold above, then I'll probably look to add to my longs. But I do need to see how that plays out on the daily. And if I do long, a coin that I actually have had a lot of fun longing recently is kind of like your left curve play is actually 𝗵𝗵𝗃. So if we see the market start to respond positively, I definitely have 𝗵𝗵𝗃 on my watch list just because this thing has been pumping against Bitcoin, with Bitcoin, actually harder than Bitcoin. So this is definitely one to watch. It's on the 4 hourly now. You can see, you had that breakout, you had the deviation below the horizontal support, and then you've seen a push to the upside. This actually looks like a short on the 1 hour hourly. Actually, it's kind of pushing into resistance and making a lower high. But it's obviously not a trade right now. It's one that you only would take if Bitcoin starts responding well. So that's like kind of your higher beta play at the moment, alongside some of the other alts. All right, that's kind of my market update. Let's get into a macro update now with the latest US GDP data that we got yesterday, which has shifted, I think, the macro environment quite significantly. Before we get into that, I want to remind you, if you do want to trade, you can do so on Gains Network. I know a lot of you are looking for new trading homes with some of the KYC requirements that have entered centralized exchanges. So if it interests you, we do have a partnership with Gains Network for trading on a DEX. I do a lot of trading on a DEX, you guys probably know by now if you watch my show. And I think Gains Network is one of the better ones due to just the amount of pairs that it has, and also the ability to trade, commodities, trade Forex, gives you that flexibility as well. So yeah, if you want to trade on Arbitrum, Polygon, there's a link in the description to Gains. There's still 2 days left of their King of the Hill trading contest to win 100K. So if you were going to take a trade you've got a lot of conviction in over the next day, there's still a chance to win a prize there with the top 30 traders on Polygon and Arbitrum winning the share of $100,000. And I only think there's a few hundred people actually entered in the comp. So look, if you are going to take a trade, there's still time for that. But if not, if you just want to trade nonetheless, there's a link in the description to Gains Network. Thank you to the team over at Gains for partnering with us here on the channel. All right, let's go through the macro now, and then let's get into Solana. That is the agenda for the rest of the show. The 2 big topics I want to speak about. So in terms of the macro, we actually had US Q1 GDP numbers, so gross domestic product numbers, come in at 2%, which was 0.6% higher than the market expectation of 1.4%. So the 𝗵𝗵𝗃 letter us is the Fed paving the path to a soft landing. And this is a really interesting one in terms of its impact on the stock market and crypto, because look, at the end of the day, we do want a strong economy. A strong economy is long-term the most sustainable way to get strong liquidity conditions across markets, across a multitude of years. So you always want strong GDP data long term. But we're kind of in a weird situation at the moment where rate hikes are still a major factor in driving these markets. And the fact that you get strong data, it almost gives the Fed that license to hike that second time this year that people don't really want to see, because obviously high interest rates are bad for crypto, bad for tech stocks, etc. So it's kind of this weird situation where you want a strong economy, but bad news is almost good news for markets because it lowers the chance of another rate hike. So whether the Fed uses this as license, the strong jobs data, the strong GDP data as license to keep hiking, that's something we'll have to see. But what we do know today is that we see now a 50% chance of a second rate hike by year end being priced into the market. So the chance of one rate hike started to decrease, and the chance of 2 rate hikes is now increased off the back of strong data. Obviously, the Fed using their macro data like the GDP data, the jobs numbers, etc., to make decisions on the interest rates. That's interesting, and you would think as a response, Bitcoin would have dropped and the stock market would have dropped. But I think it liked the fact that the US economy isn't signaling that it's going into like a full-blown recession, which is one of the major fears overhanging in the market right now. It's this recession fear heading into Q4, Q1. And the fact that GDP was quite good, I think the market responded positively because some of the people that were, a lot of people are sidelined, and there's kind of a lot of anxious investors after this big rally because there's this kind of sentiment that we could flip into a recession at any moment. Bad data is going to start coming in. We didn't get that bad data, and that gave the market confidence over the last day or so. So we did see Bitcoin respond positively in the short term. We saw a little bit of a pump, but not a whole lot. We largely saw it get faded by shorts around the 30.8K level. But we did also see the S&P start to move higher. I mean, it's been on a tear recently since breaking through its resistance at 41.77. We've actually been charting the S&P for quite some time at this level. So, this was a great move to the upside of roughly 5 to 6%, which doesn't seem like a lot if you trade altcoins. But in the stock market, 5% move is very, very significant. So, yeah, interesting to see the market respond quite positively to that. If you look at Gareth is kind of in the bearish camp right now, saying, look, he thinks that the higher GDP numbers actually signal this second rate hike, which sets up potentially a harder macro environment heading into Q3, Q4. He said jobless claims drop sharply, GDP jumps to 2%. This sets up for another Fed hike. Risk of policy error increases, the higher rates go. 10-year bull wedge breaking out channel is next. So this is the US government bonds on the 10-year yield, which we have started to push to the upside. Even though they are breaking a bull wedge, they do still have this resistance at this upper channel here. So if they get rejected, then typically bonds going down, you can see equities go up. It's really just like a rotation of capital. People like, when interest rates go up, people like to shift out of equities and risk assets into yield-bearing assets, typically, because it's more enticing, right, to get a 4% interest rate on a bond versus equities if interest rates are higher. But if interest rates go lower, then that's when we really see risk assets perform. That's typically why in low interest rate environments, something like a Bitcoin performs better and tech stocks perform better, because people are starved for yield, and they simply go for the capital growth and the opportunities in emerging markets and slightly higher beta markets, like the stock market, like Bitcoin, like crypto, etc. So that's why we're talking about interest rates a lot, and all you've heard about over the last year's interest rates is because it does matter. When interest rates go up, that makes the prospect of investing in stocks and crypto a little less enticing, and also it does increase the likelihood of pain later down the road, because we don't always see the full effects of rate hikes straight away. Usually 6 months to a year after a pivot is when you do see the full effects of the rate hikes actually on the economy. And then, who knows, the Fed might go back into money printing and might go back into rate cuts, which could spell a whole new narrative for Bitcoin and crypto. So we won't look too far ahead in today's video, though. So we also saw, as I said, jobless claims start to fall. So that's the unemployment rate. Well, technically not the unemployment rate, but a sign of the employment rate in the economy. If jobless claims fall, that means less people are jobless, basically. And yeah, as we see, the Fed sees 2 or more rate hikes by year end. We've also seen a few of the international Asian equity markets start to rally. We saw renewed interest in the Japanese market. Some interesting developments out of China as well, with some economic analysts actually expecting stimulus to come out of China. Spot gold actually falling below 1900 for the first time after the strong data as well. We know a lot of people use gold as an inflation hedge. When rates hike, gold tends to perform a little bit worse. When you see like us coming towards the end of a rate hike cycle. In the beginning of the cycle, it does quite well because that's when inflation is at its highest. That's when investors are most scared, and that is when people flock into gold, like we saw late last year, early this year, when there was a huge migration into gold. All right, so that's kind of my market there. You kind of have my charts for Bitcoin. You have a macro update. And yeah, gone through a couple little bits and bobs there. But now let's get into Solana, because that is the major topic of this video. Now, why have I picked the number 98.87%? Why am I saying that investors are going to miss the Solana pump? Well, I'm going to get into that in a second here and actually outline my thesis. Just going to look through a few questions. Someone says, 𝗕𝗏𝗧𝗏𝗿𝗄𝗏. That's so funny. 𝗕𝗏𝗧𝗏𝗏𝗏. Oh dear. Why did Sol pump? We're going to get into that. Basically, the reason why it pumped is because you had Robinhood forced selling on June 26th. So if you guys remember, around the time of the USDT fight, I'll get the Solana chart up now. It's actually when I was buying some Sol on the 11th of June. There was a lot of panic because Robinhood came out and they said, look, ADA, Matic, and Sol, if you hold these assets on June 26th, we are going to force liquidate them from your accounts because we no longer want to list them. The reason why they did that is because they're under increasing pressure from the SEC to not have blatant, obvious securities listed on their exchange. Because the SEC named Sol, Matic, ADA alongside another 13 tokens in the Binance and Coinbase lawsuits as potential securities, there are risk-off exchanges, especially non-native crypto exchanges like Robinhood, which offers stocks and is compliant in other areas, that decided to go risk-off and just remove all the assets in question, or remove some of the biggest assets in question, just to at least show the SEC they're not being dumb in the face of a pretty clear ruling from the SEC. Now, obviously, this needs to go to court. And the courts are going to make the final decision as to what definition crypto assets satisfy, if they do satisfy the Howey test, or whether we need to create a whole new framework. That is what the courts will do. The XRP case does have, I think, a little bit of say in what kind of precedent is used. I know it's not in a higher court, but it'll still be interesting to see the XRP case play out. But basically, Robinhood went risk off. So on June 11, when they announced this, there was a huge sell-off because, look, Robinhood owns a significant amount. I think Sol, Matic, and ADA were over $500 million cumulative worth of holdings for Robinhood, which is a significant amount of sell pressure if people are being forced to sell. And what we actually saw was people with Sol, ADA, and Matic in their Robinhood accounts, they were liquidating in the lead up to June 26 because people were panicking to get out. Then we saw shorts start to pile up. That's why we saw this move from 22 all the way down to 13, this huge move to the downside. And then we also saw on the actual date, the 26th, as you can see here, it actually ended up marking a bottom. So just a day after Robinhood, that's when Sol ended up putting in a local bottom, because that's when you had the last of the forced liquidations. And after that, you kind of have to sit back and look at Solana and go, well, what other forced selling events do we have now? Celsius has been liquidating for months. Voyage has been liquidating for months. FTX dumped a whole lot alongside Alameda last year. Now, they might have some left, but now you've had Robinhood forced selling. I mean, Solana's been victim to a lot of forced selling in the market. So I think what is happening now, why did Solana pump? Well, the reason is the market is waking up to the fact that these supply overhangs are now a thing of the past. These supply overhangs, and Robinhood being the last and the biggest one, has now happened. And although Sol is generally tied to the general altcoin market, it had additional sell pressure compared to other coins. So when you kind of put that behind you, there is now a path forward for Solana. Whereas it's very hard to make a case for a path forward on June 11 when you're seeing forced selling. Why did I buy though? Well, the reason I bought Solana on that date, and the reason I tweeted about it, is because I was front running this reversal. Because often what we see is the pre-sell off is often bigger than the actual forced liquidation date, because you have investors shorting pre-event, trying to make a quick buck, and you also have panic sellers selling pre-event because they're scared of the potential price impact. And that's why on the day of the actual Robinhood forced liquidations, we saw an uptick in the market starting towards the end of the next day, because people were like, okay, this is behind us now. Now, that is just what happened in the short term. I have a long-term theory here based on how Solana might trade over the next year. And I'm going to get into that in just a second, and also give my pros and cons for why would you hold spot Solana, and maybe why wouldn't you hold spot Solana? Because I know a lot of you do hold it, and some of you might be sidelined and want a bit more clarity on, I don't know, just my opinion on Sol long term. So we're going to get into that. Before we get into that, I want to remind you, if you do want to sign up for an OKX account, there is only 1 day left to claim this $30,000 reward bonus. So if you are in a jurisdiction where you can trade on OKX and you haven't signed up yet, consider doing it today, because if you sign up for an account, you get a $10,000 mystery box as a max prize. Of course, you're not guaranteed 10K. You could win a lot less, but you're going to get a mystery box. Step 2, if you deposit more than $50 or more, you get a second mystery box. That's 20,000 now with the mystery boxes, potential max prizes. And then step 3, if you actually trade on the platform, build up trading volume as per the volume graph here, based on how much USDT volume, derivatives, and spot you can build up, you can win another $10,000 worth of trading bonuses. So that's $30,000 of max rewards. Pretty big rewards campaigns. One of the bigger rewards campaigns we've done on OKX, and only 1 day left. So if you were going to sign up, I think today would be kind of your last chance to get this $30,000 reward before it goes back to the other promo, which is the $10,000 mystery box promotion. So link in the description to sign up and trade on OKX. Of course, they do have Solana. They've got basically all the other crypto assets as well. The other thing I want to say quickly before we get into this Sol thesis is this video, of course, isn't financial advice. I'm going to give you my opinion on Solana, and I'm going to tell you what I'm doing with Solana. Doesn't mean you should as well, right? You always have to make investment decisions based on your portfolio. I'm going to try and remain objective in this video, but your personal investment strategy is going to differ from mine because everyone's in a different situation. So I just want to mention that this video is for entertainment purposes only, of course, and you have to make your own decisions. All right, Roaming said he accumulated more Sol at 13. Let's see. Let's have a look at some other people, what they're saying about Sol. Sol is public because of Sol, D-Bridge, DLN, cross-chain bridge. I don't know, bro. I think it's just because of this The Robinhood thing is probably the most logical reason for why it pumped, and also the fact Bitcoin's holding at around 30. You said you missed another Sol pump. Well, there may be a much bigger pump to come later on, and that's something we're going to discuss. So you may not have missed the biggest one. Robinhood sold all my shares. I knew they were stopping sales. Didn't know they could sell it on their own. They can. They announced on June 11, actually, that they were going to do forced liquidation. So sorry to hear that they sold it for you. But yeah, I mean, that kind of sucks to hear. Hopefully, though, execution wasn't too bad. Hopefully, execution got you out at like 16. Then you're not too in the red. All right, let's get straight. Someone said Solana looks good. Yeah, some things about the price action do look good. It was way down. It's a big project. That's it. It is it, but it's been a big reversal. So, like, if we look at look at the Solana, right? From its low on this wick on June 11, it's rallied 36%. If you look at other big projects, your AVAXs, even Ethereum, like, they're not really up 13, 14%. Solana's been the biggest bouncer since the bottom, and Robinhood's a big reason for that. But there are also some other reasons. Now, let's get into the thesis here. So first thing I want to do is go through Solana's TA. You have this bigger trend, which we saw multiple touches of, which we actually did end up wicking off. Interestingly, this trend has kind of stayed intact for a matter of months, which is a higher time frame trend on the weekly chart and also the daily chart as well. So you see this big trend here. Solana is still kind of following that trend, and we actually did see a wick off the top of that. Now, in terms of horizontal structure, this is a pretty key level for me. I'm going to make it even clearer on my charts for you. In case you're watching on a phone, it's this level here. It was this initial wick to the downside where we got a really strong bounce, and then we smashed through back in November during the FTX force selling. That was kind of your last horizontal level of support. If you also go back to the bull run, you can see from a TA perspective, you also have this key level here, which lines up with this $20 mark as well. It was the initial breakthrough and pump, the initial retest after the pump. So, when Solana first had its breakout, it also retested on the way up. Multiple wicks as well, one in May and then one in June when you had that first correction, and then another one in July. Didn't quite get there, but also tested this level on the way up. So we know how important this $20 region is. Now, that was during the bull run. If we fast forward to today, this $20 region as well acted as support during FTX and recently acted as support for Solana before it ended up collapsing. So from a macro perspective, in terms of general strength on Solana, if you're a trader that's waiting for a reversal to trade Sol or buy Sol, then the $20 level is so important. I mean, it's just so important. You can see a scenario now where we push up and actually end up rejecting off this level and coming back down. That can happen. So if you are a buyer that wants to get a confirmed buy on Sol, what you want to do is wait for probably a weekly, because if we zoom out, we can draw a weekly support and resistance level here. If you take the horizontal ray and put it around the $20 mark, what you would want to do is wait for a weekly candle close above. We haven't had many in recent times. The weekly candle close above would also signal the flipping of the first major level that you need to flip to turn resistance into support, which is at the 19 to 20 level. So this is major macro level that you do on a flip for Solana to be considered, back in an uptrend. If we go onto the daily to have a look at the EMA, funnily enough, the EMA is coming down. So you may actually see the flip of the resistance level coincide in confluence with the flip of the 200 EMA, which is one of my major momentum indicators. We can see on Solana, let's historically look on the daily how it's responded to the EMA as well. If we zoom out, we can see the EMA has really acted historically as Solana support. So this is the EMA. We see 1, 2, 3 touches of the EMA and also this horizontal level at 20 during the last bull run. We had a huge pump. Then once we broke down from this EMA, we had our retest, which resulted in basically the bear market starting. So after we flipped, had a bearish flip, although we did deviate above at times, that was largely the beginning at $144 of a downtrend for Sol, and we keep rejecting off this level. So in recent times, we rejected at 27, we rejected again here at 25, and we didn't quite get there, but you could almost call this a rejection or a pre-sell-off at 22. So this EMA flip, if this flip does happen on the weekly, a confirmed flip, first the daily, that's the first thing you want to see. Secondly, it's the weekly time frame. You want to see a candle close above that, and 20, which actually may line up with a August-September timeline here. That is your big level for a macro Sol reversal that can take you to that $30 target, to that $40 target. But that is your level that you need to see. And we may very well, like we have the last 5 or 6 times, get rejected off this level. So in terms of a TA perspective, macro, definitely keep an eye on the EMA 200 on the daily, and also the $20 level, 1950 to 1920, which you can line up with the last bull run in 2020 for 2021 for a macro level. It's so key. Someone said should have bought more Sol at 16. You may not have missed that, and I'll explain why. Solana now has had a nice pump. So it has had a pretty nice pump from the lows at 13. I said I was buying blah 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 on my Twitter when we were roughly, I think, 1450. So it was great to get a buy there, but something to note is that we have had a pretty substantial pump. So if you actually go onto the hourly chart here, you can see we've had quite an aggressive move to the upside, and we are approaching resistance in the $19 to $20 level. So do we see a sell-off? Well, what we're actually seeing from Sol now is consolidation. It kind of looks like a bull flag. So from a TA perspective, you could almost argue this looks decent. If you go into the 1 hourly, you can see we're kind of breaking above this diagonal. It's not a perfect trend. So if you really want to chart it, you can draw in your three lines here for your 3 touches on support. You can also draw in your flag, but since we don't have many touches on the upside, I don't think it's the most confirmed trend. But what you can see is that Solana is forming an uptrend on the hourly, which is your bullish indicator, as well as the fact that it has flipped the 200 EMA on the hourly as well after it came underneath and has broken up quite strongly to the upside. So we have had extension here, but Follis does note, he's a trader I really respect, that you still have this zone in the $17 region that is still a key liquidity pocket for Sol. So it's this region in here. I'm going to draw it in for you quickly. This region in here for Sol. And you could even tighten this up a little bit. That Sol could still come back and retest as your next support. So if you do end up missing this pump, maybe we do end up getting sucked back into this region, especially if Bitcoin does have that breakdown, because alts are your beta play on Bitcoin. So on the lower time frames, you can actually look for this pullback if you're not trading breakouts, because trading breakouts is kind of risky. So that's what we see in the short term. One of the reasons for the pump, I actually think, was 𝗍𝗧. Like 𝗍𝗧 this guy tends to move markets, and he did an Uno reverse meme about Solana, and he said Robinhood almost done nuking most of their Solana, kind of an indicator there that he was long. Usually he operates very cryptically, so he doesn't say I'm long Solana. He'll say something like that, but that means he's long Solana. So that actually resulted in a lot of people longing Sol. 𝗕𝗆𝗃 came out and said no Sol selling left for a long time. Everyone washed out. That's a point that I made before. Time to punish the mid-curve takes that this is a dead chain, despite the 3 strongest community in the entire space after Bitcoin and ETH. I'd rebut him and say XRP and ADA could be even stronger. I don't know, though. Sol definitely, in terms of the bull case for Sol, has one of the strongest communities in crypto. I'm going to get into the bull and bear case in a minute, by the way. He says, as I've said before, the largest backer turning out to be one of the greatest frauds in history didn't kill it. So if it can't die after that, I mean, that shows some resilience. Some Robinhood selling was never going to. So that's very interesting, and that's partly one of the reasons why I ended up buying. 𝗏𝗏𝗧 said, I think you'll be able to buy Sol cheaper than the current price in Q3, but it's amazing how many people are writing it off. And, I saw a tweet the other day by someone. He said, you think Solana's dead, but you keep talking about Solana. And I thought that actually kind of proves the Solana thesis, right? Everyone thinks about Solana because of how well it performed last bull run. I mean, how divisive it is, how big the community is. It's in everyone's mind. It takes up a lot of mental real estate, right? Solana is just that token. It's in everyone's heads. And the thing is, when a token's in everyone's heads, it's kind of impossible for it to fully disappear because it has investor mindshare. And mindshare is not something you can just build overnight in crypto. It has to happen organically. And for Sol, whether it's unfortunate or not, well, it is pretty unfortunate what happened with FTX and Alameda for Solana. It's still in people's minds, irrespective of that, irrespective of the centralization issues. And when people think about something a lot, you'll be very surprised to see in positive liquidity conditions, in periods of market momentum, how well coins like that can actually perform. You see gold crypto saying Sol does have a lot going for it. Robinhood capitulation, 𝗲𝗏. Don't know if this is necessarily a dot point, but look, he was bullish. FTX relaunching and renewing optimism in Sol. That's another factor. We had the FTX relaunch announced that that's something they're working on. So Sol should get a listing over there. But I did buy the other two Robinhood coins, 𝗏𝗏 and 𝗏𝗏. Not sure what happens next, but it's worth some exposure just in case. So let's go through some bulls. Let's go through a bull and a bear case now for Solana. So in the short term, the bull case is obviously there's no more selling overhanging on the market. There's no more supply overhang. So I think that does give it license to expand to the upside in the short term. You guys kind of know my macro levels there. There's still $20 for Sol to reclaim, but on the 1 hourly starting to put in some higher lows, which is good. So basically we're confirming a reversal right now. Long term though, that is where you're going to get your biggest price movements for Solana, because look, you can trade this all you want short term, but for me, Solana is more of a long-term bet. And what I'll do is I'll use TA as a tool for me to get long-term entries. So I saw the big capitulation sell-off, and as part of my long-term accumulation strategy, I saw that as an opportunity to add to my spot bag. So I'm just building a spot Solana position over time. If we do break above the 200 MA on the weekly and the daily, I'm going to start adding to my bags even more as a potential signal for a sustained rally to the upside. I might add some leverage if things are looking good at that moment for the market, but I can't tell you now because we're going to need to see how the market responds at that level. But how I view Solana is more as a long-term play, right? So here's kind of my thesis for Sol. I put a few dot points down mostly just to help me, but I'll kind of expand on these. Now, here's the main argument for Sol. The main argument. Go into CoinMarketCap, go into CoinGecko, look through the list of layer ones, right? How many bona fide layer one non-EVM solutions do we have in the market that work? So if you want to invest in an Ethereum hedge, so a non-Ethereum, a non-EVM product, so a bet against the constraints of the EVM, where are you going to bet? So you can bet on AVAX, okay? You can bet on Cardano. We haven't seen that much from it yet, but you can bet on Cardano. You can bet on Tron. You can bet on Polkadot, XLM. Not really Atom, because that's more of like a interoperable ecosystem. Polkadot also a bit different with its structure. Neo you can bet on. Phantom it technically operates on the constraints of the EVM, although they are launching an FVM, so that's kind of in the. I mean, yeah, I guess Phantom can make the Phantom argument, but there's not many, right? Basically, my point is, compared to the amount of L2s we're seeing, and compared to the growth of the L2 sector, if you want bona fide exposure to an L1, a faster one, a scalable L1 with an already built community that's not an Ethereum rollup or Ethereum L2, Solana's like one of your only options here. So by virtue of that, it kind of becomes a hedge against the ETH ecosystem. Now, my portfolio is very ETH heavy, and I also have a lot of L2s that I'm starting to build a position in ahead of EIP 4844 Q4Q1. So for me, long term, I need some non-Ethereum L1 plays, or I'm just exposing myself too heavily to the ETH narrative. Because I'm such an ETH bull, I also need that additional exposure to other ecos, right? In case I'm wrong on ETH, in case something happens with ETH, or in case the limitations become so great that an L1 with less constraints like Sol that's built on a different mechanism, proof of history, ends up being the one that people gravitate to next bull run. We simply don't know. I mean, last bull run, it was heavily utilized, also heavily manipulated by Alameda and FTX. But in the next bull run, as I said, you don't have many other options for a single global state ecosystem that's not EVM, which is Solana. So that's the first thing. And I think that's the main narrative for the bull case for Sol. The second factor is community. Out of that list I just showed you of L1s, do any have a community as strong as Sol? No. The fact that there are people arguing about Sol in the comments and arguing about Sol on Twitter and talking about Sol all the time and always talking about Sol, I mean, that's enough proof that the community's strong, right? Or it wouldn't take up people's mind share. The other pro, and this is also a con, is Alameda and FTX. They're now out of the market. They're one of the reasons why Sol pumped so much in the beginning, because of their blatant manipulation of Sol. And also the predatory nature of a lot of the projects that were launching on Sol. Like we saw, like, you remember Sunny and Saber, like, turns out that the dev was stacking fake TVL, like double counting TVL to juice up numbers. I mean, that kind of stuff only happens in a bull run, and also only happens when you have something like Alameda and FTX manipulating the shit out of the price and causing a lot of damn hype. So the fact that they're out of the market, it's a bearish thing from one perspective, because there's no longer that false price manipulation to push it to the upside. But it's a positive from another perspective, because it allows the tech to speak for itself, and you have one of the more manipulative players now out. And I think a lot of people didn't like Solana last bull run because of Alameda, and that kind of hesitation or resistance to accepting Alameda is now no longer an argument against Sol. But I think the bigger overarching point there is that even without them, and even with the forced selling this year from counterparties from Alameda and Alameda themselves, Sol has actually still survived. Not only that, but it's maintained decent network activity. Okay, it's dropped a shit ton, but it's still being used as a network. And in the face of all this controversy, they've still shown that they still want to build, they still want to innovate, projects still want to deploy them. Like, I've seen some great projects like Drift Network, for example, starting to build like DEX applications on Sol. And it still remains one of the more diverse developer ecosystems. Like, when I went to the conference in Lisbon, I was blown away. The amount of games building there is substantial. The amount of product building there is great, because it has this kind of very tight community, like the Solana Hacker House, very tight community. And that's very important to underpin a project. So those are the pros. And because of those pros, I am, full disclosure, spot net long Sol long term. Now, do I think we may get lower prices? Maybe. In that case, I have some stables reserved to add some more slowly on extreme red days during extreme periods of fear as a bet long term on Sol. But it would be completely remiss of me if I didn't mention the cons as well. So let's maintain neutrality here. What are the cons of holding Sol long term? Well, one is just the obvious one. It might not just work out. I mean, long term, we see the best performers from one cycle to another. They continuously change each cycle, and sometimes the new coins perform better. Now, last cycle, Sol was a new coin. Sol performed better. It had less constraints. The issue with Sol now, getting back even close to $100, $200, is the fact that you have, and we'll look on the weekly here, not just multiple, most holders actually underwater. So you guys know how price actually works. When price hits its highest is when you have the most buyers. That is just market psychology. That's maths behind market pumps, right? Most people bought Sol here, 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 and maybe they're even buying the dip here, right? Most people bought in this range from 150 to 250. That's just how it works. Otherwise, the price wouldn't have got that high. Most people sold Sol here, 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 here. Most people end up selling on dips. They panic, right? At least retail, right? So you also have the other camp of people that bought in the run-up and just never sold. And maybe that's you. In fact, I think maybe quite a few of you are watching this video and you you bought Solana when it was really high, and you've continued buying all the way down, and maybe your average buy price is now $80 or $100, and you're still really, really, really underwater in your Sol. And that's okay, because it happens. That's just market psychology. You can't blame yourself. It happens with every token, not just Solana. But what does this mean for Solana's recovery if it does start pumping to the upside? Well, it means now it has additional sell pressure that newer tokens don't have. And that's its major limitation next cycle. The fact that every time it pumps to $40, to $50, to $100, you have that psychology of holders that are underwater that simply just want to get out of their investments. So if I bought Sol at $100 and Sol now pumps to $100, and I have a bag of Sol and I've been underwater for 2 years and now I've finally broken even, maybe I want to take some money off the table on Sol at 100. Maybe I even want to do it at 50 after a 2.5x. And at 200, you best believe I'm going to sell because I saw what happened last time after it hit 200. It crashed, right? So you have this psychology, and that's why it's called the underwater thesis of investors that are underwater or have bought positions and are now down on those positions, wanting to exit it at the next available opportunity. And that is your main thesis for why old coins in the market, and I will consider Sol an old coin in the context of this discussion because it pumped last cycle. That's why old coins often perform versus new coins. And I'm talking about new coins like, your new ones which are yet to launch, like ZK Sync or Layer Zero or even Arbitrum and even Optimism, which did launch last run but launched late, post-hype. Or even like 𝗬𝗏 and 𝗵𝗲𝗧, whatever you may think about them. I would just consider all those new coins. And the things that those coins don't have is they don't have as many holders underwater. So they don't have that pressure in the next bull run of having to fight through all this resistance on the way up. And that's why cycle to cycle, the top performers change, and we often see the new ones perform better. But what about old coins? What advantage do old coins have? Well, they have the advantage of having bigger communities. They have more time in the market to launch and break shit. I think Sol's been very vocal about the fact that they've launched with a broken product, with centralization issues, which we've seen, with network issues. But, they've tried to learn from those on the go and just fix on the go. Very different opposite approach from like, a Polkadot or a Cardano, which have taken things slow to develop, slow to launch. They have the benefit of having that time in the market to find those issues and build community. So what this creates is some really strong pros and some really strong cons as to why Sol will never come close to its all-time highs again. But putting aside the nuance of that argument, you really have to ask yourself, do you want non-Ethereum exposure in your portfolio in the form of an L1? If the answer is yes, then simply just look through all the L1 solutions available that are non-Ethereum and pick your favorites. And when I did that, and I picked my long-term favorites, Solana ended up coming out as one that, look, it may have a lot of issues as we've just discussed, but it's one I'm willing to take a bet on as a hedge against ETH. Now, it doesn't mean it's more than 5% of my portfolio. It's certainly not. It might only be 1 or 2%, but it's enough that if Sol can get back to 100, despite having a lot of investors underwater and maybe looking to exit, if Sol can somehow do it long-term, it's going to be a decent performer for me. So those are my points on Sol. And then nuance points. You could go down a rabbit hole of looking at each one of those points, but though that's kind of my overall thesis on Sol. And let me answer some questions here. Someone said great points, great alpha, g'day. Someone said Sol is garbage. Look, you're entitled to that opinion. If you think it's garbage, as I said, when you ask yourself that question of do I want non-EVM exposure, and the answer is yes, and you think Sol's garbage, well, don't invest in Sol. You've got other options. You've got NEAR, you've got Phantom, you've got some of these up-and-coming L1 networks that are launching soon. Maybe you prefer them. Maddie says, in my mind, any dips are massive accumulation buys into the end of 2023. Yeah, this is a point I was about to make, actually. And it's this Fabian tweet here. He says, positioning is more important than timing at this stage of the cycle. The bigger opportunity cost is not being exposed. You can know your risks without being paralyzed by them. And there are many, but they'll all be temporary. The positive developments, on the other hand, will have a permanent road forward. And this is true. Look, there are huge market headwinds, right? There's the macro. We don't know what's going to happen to liquidity conditions in Q3, Q4. We don't know what's going to happen after Fed pivot in terms of what could happen to the stock market. Do we correct like we have previously? Does the spot ETF get delayed or actually rejected? All these questions, all these headwinds. I get a lot of investors scared. But at the end of the day, you need to have some sort of position for the next cycle or a plan to position yourself for the next cycle, or it's easy to let these fears paralyze you continuously. And I feel like that's something that the bears, that happens to a lot of bears in crypto and bears in the stock market. Year after year, they paralyze themselves with fear. Year after year, they come up with a reason to be fearful. And year after year, the market gives them a reason to not be fearful. So it's kind of interesting. Like 2018, people were saying stock market was going to correct. 2019, people were saying stock market was going to correct. 2020, during the March crash, people said it was the end of the stock market and the end of crypto, obviously. 2021, end of stocks, end of crypto. 2020, every year they say this, right? And if you let those arguments overtake you and overconsume you, you'll always be paralyzed by fear and you'll never actually build. Whereas long term, these are where the biggest gains are. I mean, I know that Ethereum and Bitcoin are getting crazy inflows over the next 5 to 10 years. I mean, I have so much conviction in Bitcoin and Ether's assets that even though there's going to be bumps along the way, I just want to be net long term. It's that simple. All I want is exposure to crypto because I believe in it. It's really that simple. how you get exposure, how you trade it in the meantime. That's all questions you got to answer. But at the end of the day, I just want to be positioned for next cycle, right? And through taking bets like Sol and on other alts and on Bitcoin and ETH, that's all part of me positioning myself for the next cycle. Keeping stable coins, of course, for bigger corrections. If some of these bearish events actually do end up materially affecting the market, of course, which they will at times, but overall knowing where the trend's going. This is very important. We know the destination, but we don't know the path. And when you know the destination, that is an edge in a market. Knowing where the market's going long-term is an edge. The trick is not to ruin your edge by fucking it up short-term like so many people do. Exiting positions due to panic. Taking on crazy risk and crazy leverage due to panic and FOMO. Buying and letting emotions take control. If you know the destination, now all you got to do is stay on the path. Don't stray for the path. Keep that destination in mind. And long-term, that's where your edge is going to be. And that's why the majority of my capital is allocated for long-term. And although I love trading leverage and talking about 𝗵𝗵𝗃 and talking about meme coins and talking about all this narrative stuff in the short term, although my mind goes there because that's what takes the most active part of my mind, pure capital-wise, percentage-wise, the most amount of my capital is reserved long-term. And I think most investors are going to win out if they think about it that way. Someone said, oh my God, this is beta. Well, what are you, bro? Are you one of the guys that just FOMOs? Or are you one of the guys that's trying to position yourself for long-term? Or are you a trader? If you're a trader, you're kind of an exception. All I know is that most short-term traders rarely have an edge on the market. Rarely have an edge on the market short-term. Someone says Solana's stunning. I mean, maybe stunning isn't the adjective I would use, but it certainly is a long-term bet I'm taking. All right, I'm going to go through some questions in a second. I'm seeing a few. What did Maddie say? Maddie said, in my mind, any dips are buying into the end of 2023. Yeah, any really big dips? Yep. I think Ethereum could flip versus Bitcoin at some point this year, later this year, Q3, heading into EIP. That's something I'm watching. Actually, I got a tweet up for you here. 𝗕𝗏𝗃 did a post on the benefit to L2 call data cost post EIP, which is going to be massive. So you're going to see L2s become a lot cheaper. This is your big catalyst, probably your biggest upgrade to ETH since the merge. I think it's bigger than Shanghai in many ways. Although Shanghai was great for ETH staking, the benefit to L2s and the fee reduction you get makes ETH a lot more scalable now, heading into Cancun. So that's another catalyst, I think, that might line up with this Bitcoin ETH reversal. You know, it's funny. A lot of people are now starting to become Bitcoin maxis. A lot of people forgetting about ETH. When ETH and alts look their worst compared to Bitcoin, when things start to look absolutely shit for dominance, that's actually when things will start reversing. So when people are saying ETH's dead, Bitcoin's king, Bitcoin only, alts are dead, Bitcoin forever, at that moment, that's when things start to reverse. Now, I don't think we're at that moment yet. Dominance is still on a tear. People are still trying to buy dips on alts. People are still trading their ETH BTC pair and getting wrecked. But when we start to see sentiment get at its worst, that's actually when I'll start to look at moving some of my Bitcoin out to alts. Until now, I think it's still Bitcoin's time to shine. So before I answer some questions, just to wrap up the show, I want to remind you that if you do want to trade Bitcoin or you want to trade ETH or Solana or anything as well, you can trade it on PrimeXBT. You also get access to trading commodities and Forex. So I'm going to show you how the platform works here. You've got a bunch of trading pairs. So you've got Bitcoin, you've got ETH, you've got Solana as well. You've got commodities, all that sort of stuff. Forex. So if you do want a new place to trade, maybe you've been blocked from some exchanges due to KYC, you can trade it over on, we can see actually the Solana pairs here on PrimeXBT. You can trade it on PrimeXBT and get a deposit bonus. In fact, our deposit bonus is $7,000. Maximum deposit bonus is $7,000 if you use the link in the description, or a 25% discount on commissions if you are an active trader and you want a commission discount. So if you want to trade anything on PrimeXBT, Solana included, there's a link in the description to trade over there if you can't access OKX, because I know not all of you can access it. So trying to give you a variety of options here. All right, let's get into some questions to wrap up the show. Someone said Sol is printing. Is it printing in the short term? Let's have a look. 18, yeah, it is doing well. God, I'm so lucky to have caught that long. I mean, it's not always you can catch a falling knife like this, but and I didn't miss the exact bottom. Actually, I tweeted after. I think I got 14.30 or 14.40 average buy price. But yeah, I mean, it's just another example of buying fear in the market. That's why you guys know my strategy is to just buy periods of extreme fear on assets I believe in. ETH, BTC, clearly, but also assets like Sol. Extreme fear. That is when I'm going to start to look to position myself a bit more heavily. That's why I nibbled at Solomatic on that date. Someone said, this is very interesting. I'm exploring the idea that Bitcoin without alts is useless. An apex predator without an ecosystem to rule may serve no purpose. Well, it's interesting now with the idea of Bitcoin DeFi starting to kick in. Not only Bitcoin DeFi on BRC20, like the Bitcoin network, but also Bitcoin DeFi on Ethereum. Now we're seeing more options to have an interoperable ecosystem. It's a very interesting point. I kind of agree. I also think people like innately just want to gamble on crypto. They innately want to gamble on Bitcoin. And unless you're leveraging up on a Bitcoin position, alts and Ethereum give you that proxy to gamble. And as long as there's appetite to gamble, which is basically human nature, then altcoins, select altcoins can perform super well. So that's kind of the narrative. I mean, basically your underlying narrative behind crypto is the fact people want to speculate on crypto, right? So it's kind of like, I think, why people prefer alts. And they all want to pick the next Bitcoin. 𝗿𝗏𝗧's done nothing, but 𝗵𝗏𝗶𝗃, definitely my lost leader. Good luck. Yeah, 𝗿𝗏𝗧 hasn't really done much. I mean, let's just look at 𝗕𝗏𝗏𝗃, right? Look at the chains on 𝗕𝗏𝗏𝗃, scroll down. You'll see Cardano coming in at rank 18 with 151 mil of TVL. Despite like promising smart contracts for years, finally launching them, it's still below, even though it's like a top 10 coin by market cap, like it's ranked 8. And if you get rid of the two stables, USDC and USDT, it's actually ranked 6th. In fact, staked ETH shouldn't even be there. So it's actually ranked 5, right? It's like your second or third biggest L1 in the market. But it's like rank 18 for TVL. Just not much of DeFi happening there. That's my number one concern. And most of the DeFi is centralized to MinSwap, their biggest DEX, which has 48 million of it. And then everything else is tiny. So yeah, Cardano ecosystem, we just haven't seen it develop. Maybe it will. I think that's one of my main gripes with it, just how slowly it's grown. And look, I'll be happy to flip my tune when I see cool stuff being built there. At the end of the day, I'm just into DeFi. So I just want to see cool shit being built there. And it's not really being built there. So it's not really got me interesting. Someone asked about 𝗬𝗏𝗃. 𝗬𝗏𝗃 actually announced they were changing their tokenomics after huge backlash. Now, I copped some shit for kind of making jokes about 𝗬𝗏𝗃 on my Twitter the other day because I posted like they only had 400 active users, which is absolutely insane. Like if you look at this, you could see 𝗬𝗏𝗃 has 407 daily active addresses according to Artemis. Well, turns out Artemis was pulling data from a different API, which shows an active 7-day moving average of 11.4k active addresses, which you may think, oh, that's decent. Well, to be honest, not really. They didn't do an airdrop, so they didn't want to do the farmed engagement, sure. But you look at a project like Arbitrum, right? Let's search up Arbitrum here. Arbitrum has 1.4 million market cap at a 12 bill FDV. So it is more than 𝗬𝗏𝗃. So coming in around 11.6 bill, right? 𝗬𝗏𝗃 is around 6, I believe. 6.8 maybe. Yeah, 6.8. So we've got Arbitrum at 11.6. 𝗬𝗏𝗃 at 6.8. So let's say, for argument purposes, Arbitrum's got 2x the fully diluted valuation of 𝗬𝗏𝗃. In terms of active users, Arbitrum has 177,000 2-week average per day. 𝗬𝗏𝗃, even with the updated data, has 11k. I mean, guys, that's a 17x discrepancy or a 15x discrepancy in daily active addresses. Arbitrum is 2x higher value, but has 15x the amount of users. And now we're post Arbitrum airdrop. There's basically no benefit now to farming on Arbitrum, unless you're going for protocol incentives. So both kind of effectively in a non-airdrop environment, and Arbitrum outperforming 15x, kind of tells me from a activity perspective, 𝗬𝗏𝗃's kind of not the best play. And what I saw from the team in terms of its predatory selling, now we don't have full confirmation over who sold and why they sold, but we do know that they sold a lot. Due to that, and due to the fact they knee-jerk reacted and changed their tokenomics schedule, it just all looks very centralized and fishy to me. It looks cash grabby. I'm being honest, it looks cash grabby. Now, I hope they can develop a nice ecosystem because they're a new coin. We know new coins pump the most, but it does look a little bit A little bit cash grabby to me. My tweet had more likes than 𝗬𝗍 users. I know, it's so hilarious. Until the data got amended, and now I don't technically, but it's still very funny. Still very, very funny. All right, let's go into some last final alpha here. CFX, something I think you should add to your watch list. We saw DWF Labs, to be honest, a VC with a dubious past, but nonetheless, big market maker and starting to buy CFX OTC. Bought some off their treasury. I do have a big level here that you guys should put on your charts. It's this level here. We've seen multiple touches of this diagonal trend. Now we're starting to see a pivot. So we're starting to see a higher low. If we do get a break here of CFX, this could be your long-term level to push up to 30 cents. CFX, interesting. Also kind of a proxy for the China narrative. Had a big pullback. If we see a reversal here, I become interested. So add it to your watch list. We can also see we did break above, but we have broken back down below, but are coming up back to test the 200 MA. You break above this, that's your first level that you can break. Confirm above this diagonal, and the case for a push up to the horizontal becomes stronger. This will obviously, though, like any altcoin, will only happen in a strong Bitcoin environment, but we start China maybe implementing stimulus. We saw last time that happened, what happened to the run, right? During February, March, we saw a huge run off Chinese stimulus kind of liquidity narrative. That could happen again if there's more Chinese stimulus. So just keep your eye on this break. That's one to add to your chart. Okay. That's one thing. World Economic Forum, China's economy needs time to recover with big rally and stimulus unrealistic. So some analysts saying it's unrealistic they get stimulus. Nonetheless, it's in the news. EIP 4844, something I'm looking at. ARK ETF we discussed before. Previous bear markets have been the point that Bitcoin whales start accumulating. We can see the number of wallets holding more than 1,000 Bitcoin increase. ETF news brought some renewed interest by whales. The new of them has increased slightly since the filing. So interesting that number of addresses has increased, but we also did see a sell-off across some whales pre-ETF. I don't know if that was insider positioning. We saw that in terms of balances holding more than, I think it was more balances holding more than 100 Bitcoin. We did see a sell-off. So this on-chain data basically means nothing. But if you do want to take it into account, take it into account. HSBC, this is actually huge news. Largest ETF manager in Hong Kong said it's reviewing the possibility of deploying crypto in existing investment products. This is actually big news. So that means current stock exchanges offering derivatives, ETFs, etc. Hong Kong's really advancing how they integrate crypto. So I think a lot of the pump has been kind of triggered by increased sentiment surrounding Hong Kong. So that's kind of been your domino effect that maybe put some pressure on the US to maybe approve some of these filings. And that's maybe why BlackRock did end up filing. So I hope you enjoyed this show. We went over Solana. We went over the market. I am going on holiday now. So going to Italy, going to Greece, gonna take some time off to relax. I will be on Twitter though. So Miles Deutscher, Twitter, link in the description if you want to stay up to date. But I have pre-recorded a lot of awesome content. I have honestly a lot of alpha dropping over the next couple of weeks. Trading strategies, long-term theses on coins. Just to give you some examples of shows that I've got my favorite L2s based on EIP. I've got an LSD narrative play with my favorite picks there. I've got my favorite unreleased coins that I'm talking about, airdrops I'm talking about. Lots of stuff coming. Lots of awesome content coming over the next 2 weeks while I'm away. So although I may not be live for the next couple of weeks, I certainly will be dropping alpha and also some AI, DeFi, llama strategies coming as well to help you become better investors. So thank you so much for supporting the live content over the last few weeks. Your support's been amazing. I really, really appreciate it. And the alpha isn't going anywhere anytime soon. So thanks, Rusty, for wishing me well on my holiday. I certainly need one. It's been a crazy few months in the crypto market. I can't wait to just relax by a beach, sip an Aperol Spritz in Sicily and just chill. But I'll probably be on my phone on Twitter as the degen I am, monitoring active positions. I probably just can't escape them. Get dopamine, crypto degen. I still need my thanks guys for the holiday wishes. Still need my dopamine fix. I'll see you in the next video. Remember, links to PrimeXBT, gains, and OKX in the description below if you do want to trade. And I will see you from the Mediterranean. See you in the next one. Peace out.